to the Stock Market Morning Prep video for Friday, September 5th. Today's the big day, non-farm payroll numbers that are coming out. So a lot of hurry up and wait in the marketplace, especially coming off of a big holiday week. It's Labor Day week here in the United States. So now we have ECB coming out yesterday. Mario Draghi saying that they're going to be cutting rates. So QE for them has continued, and that pushed the futures higher, markets higher, and then right around about 1 o'clock, we kind of sold off at its highs around 11. Then we kind of drifted sideways in and after lunch, and then right around 2:33, the markets really started to sell off, and then of course bounced at the end of the day for a little bit of a short covering round, but very, very quiet, very subdued trading, waiting for this obviously anticipated non-farm payroll numbers come out. So a lot of people, traders, either taking profits or just sitting back and waiting for that non-farm payroll number to come out this morning at 8:30 Eastern Time in the U.S. So we're going to see what happens, and that's going to really play a big and significant role. As we all know, we're at the highs here, and it's going to be interesting to see what really happens here. Does the market start to roll over, or is good news and bad news good news? And I know that sounds silly, but it seems that everything the market does is one-sided, and the markets just continue to go higher. So we'll see where we are here. But this could be a good point where the market participants rather start either repositioning or look for higher prices, and that's yet to be seen. But we're going to watch that closely. Now, I had mentioned yesterday we were showing you the McClellan oscillator actually pulled back quite significantly into that 20 in a Bollinger Band. I'm not going to show you the indicators today, guys, because really not much has happened. We're going to really see what happens tomorrow. Would love to get a big push to the upside, and then let's see if we get that that capitulatory high and then start to roll over again. We'll see. Markets are a little bit iffy, at least the indexes that we follow. I'll show that to you. Transports made new highs. Dow still sitting at the double top. IWM rolled over yesterday as far as not being a stellar performer, or at least starting to pick up steam to the upside. So that's still lagging. Market divergence is still upon us. So the markets are a mess at the moment. And let's see if we can really start to get some sort of symmetry in the indexes as a whole. All right, so let's go right into it. Dollar here, as you can see, hit our yet another target. We do have a little bit of a cluster. We're up again this morning, and we broke out, made new highs again. So as you can see, this is quite extended. This thing's been the dollar index has been rallying. So we'll see. There's two ways of looking at it. They say, okay, well, it's going to cost more money to buy U.S. goods. That's not a bad thing. But however, when you have people and investors abroad taking their money and putting it into the U.S., that also stimulates the economy. So there's two ways of looking at this, and we don't really know how the reaction is going to be with that ECB stimulus continuing in Europe. As you know, when dollar up, the euro is getting clobbered. So we really have, it's sort of like a hurry up and wait. So we're going to really kind of monitor it. I will tell you that the commodities are not going to do well with higher dollar prices. Now, to me, this looks like a huge capitulatory move to the upside, and let's see if we do get some sort of a pullback. Look at how far away we are from the 8, no less. Forget about the 20, then the 34 to 50, and then they have the 200 way down here. So to me, this is something that really needs to be watched closely here before you get really active or building any type of positions in commodity sector itself. Okay, take a look at the ES, really doing nothing here. As you can see, we've been sideways for pretty much 5-6 trading days. We tried to break higher, and then we failed again. So that round lot number is really going to hold true here. So again, I think today we'll decide if we indeed start to push higher, or we get that move and we start to make that move lower, because we're basically just literally sitting on that 8, and as you can see, that 20 is holding nicely in that middle of that trend line support here. Okay, so that's going to be, if anything, that first target at 1893, 1894 is what I'm going to be looking at if we start to push lower. Okay, that'll be really first, and then we'd kind of reevaluate it, because it just seems as usual. And as you can see, every time the market sold off, they bought the dip, and we had this extreme sell-off here And I mean extreme for a short period of time, a little over, or just under 6%, and then we rallied more than 6% on the way back up again. So as you can see, the mentality of buying the dips continue. Again, personally, I would never buy the market here at any type of positions here. Obviously, unless it's a day trade. To me, the risk is so great up here. Despite even if we can go up to the 2027, which would be the upper end of this trend line, I just it's not in my cards. It's not my trading plan. Not when you have a vertical move up this way. Now, that doesn't mean that the markets can't go up to this level here, and that would be the next upside target. Would be here, and I would do some fib work to get to that area here. And then, as you can see, we have the big 2618 off of this back here, this high to low. So it's just really. I think the markets are in dire needs for a rest here, and the markets are moving higher, and only reason is because of central banks printing money, Fed Chair Janet Yellen continually just dumping money into the market. That has to be some sort of a symbol, a sign that the markets are still screwed up, and we need extreme help from Janet Yellen and company. And that's scary to realize that. You have big geopolitical conflicts going on around the world, and that has yet to take hold. But eventually, once that escalates, and I don't see anything de-escalating the situation anytime soon, I think the markets are going to finally take hold and say, okay, let's start taking some profits. Now, the big $1 million question is when, and we don't know that at the moment. So let's just keep trading the plan and see what we have until then. Now, double top, as you can see, Dow Jones, the diamonds. So the next upside target will be the 1272, and again, it's consolidating at the highs, which is very bullish, no question about it. But the non-farm payroll numbers that are coming out early this morning at 8:30 will be the deciding factor. That will either going to push this back up into the extensions, or we're going to start to roll over and possibly even start that trend lower again. But we shall see. Again, it's a hurry up and wait, guys. So we have the double top in the diamonds. We have the S&P going absolutely nowhere. But we have the transports, our leader, making new highs yet again. Don't ask me why, other than the fact that oil sold off yesterday. Maybe that put a bid in. That's one of the culprits, inversely correlated. But to me, this is just an unknown. I just don't have an answer for why the transports will be rallying and the other markets starting to sell off here. And the transports are well bid up. And also we had some negative news coming out of FedEx and UPS, which are one of the biggest heavily weighted stocks in that sector. So well bid, good for the bulls. It is our main leader. So if this continue to holds true to the upside, look for that 1272 extension, and that will also help out the other indices that are following suit and should follow suit. Okay, let's take a look at the IWM. Again, this is something that needs to be addressed and not ignored. We are back under that big 618 extension. Let's look for either another bull flag and see if this breaks back out to the upside, or if it does start to break lower, this needs to be watched closely, because this could be that one indice that takes everything else down. It is one of the leaders, so we need to definitely watch this closely. And lastly is the Qs. Now, Apple got downgraded 2 days ago, and this is heavily weighted in Apple. A couple other of the high beta tech names also started to sell off today. So I think Qs are very extended here. We do have a new product launch coming out in Apple next week, so we shall see. But again, another hurry up and wait. We're coming off of the vacation mode. This is really a continuation of last week. So tomorrow is going to be exciting that we're going to get this week over with, and whatever that number comes out, more than likely we'll start positioning ourselves, or at least get our trading plan for the month, and then we'll continue what we do, and looking for brand new setups for next week. A bunch of sectors that I'm watching closely. As you know, one was the home builders. They did not move to the upside. They did not break that consolidation like Lennar, TOL, Toll Brothers, D.H. Horton, the ITB, which is the Home Construction Index, USG. They all started to fail coming out after we had Toll Brothers come out with their earnings. So that did not trigger, but I'm still watching them closely. The crude oil sector, all right, the oil sector, the services, keep an eye on them. Yes, oil was down yesterday. We had a big move in the dollar, but that is something that I believe is starting to stabilize, and we could see a big move in crude oil, and you want to be ready for that as well. Okay, have a great day. Enjoy the weekend, and we'll be back with a big report on Monday. Have a great day, everybody.